Good afternoon, everyone. My name's Luke Purse. I work at PSE. PFs, if you look at the term, they've been around a long time, but actually regulation around them from a scheme perspective is probably about 4 or 5 years old. I've still got the scars from being fined at Citibank. I have some colleagues here who've also probably got the scars, as we suffered significant fines and penalties because of facilitating the movement of money without having the end contract, and that's been one of the big challenges around this. And certainly what I'm going to talk about today is just around some of the opportunities that happens from a PF perspective, because we were talking about this subject in the office, and this is, I don't know how everyone else views this, but this is getting a lot of discussion, debate, people looking at it. Some markets are moving very slowly, i.e. this market, but there are some markets outside of Europe that are having huge focus. So I've been doing a lot of work in Australia and New Zealand. Significant amounts of effort are being looked into the sort of PF models, because they are keen to grow the acceptance, they're key to reach new opportunities, and therefore acquirers are having to build some of the functionality. I would say that it's probably a blessing, I would say, that we've got a regulatory framework in Europe where these organisations have to be regulated. Despite some of Peter's and some of the losses that have been seen in the past, there is that aspect of regulation, whereas outside of Europe, it's not so clear, and there's more sort of Wild West, let's say, of organisations that are potentially leading to fraud and losses. So what are they trying to do? And one of the things that we often see is payment platforms are trying to build this universal provider of services. They're trying to support all types of customers, every channel, all the different platforms that they need to support, and ultimately trying to offer a full end-to-end acquiring service. And this is where we're seeing the sort of universal provider starting to invest their time. So I'd say people who would like to aspire to achieving this, but clearly it takes a lot of work to get there. But what we're also seeing in the EU is the evolution of the gateway. So Peter's touched on a lot of these, and we're starting to see ISOs wanting to become PFs. So they're going down a natural route here. So they're starting to recruit merchants. They're starting to do services like KYC, customer due diligence, gathering information, and then naturally trying to get a greater share of the economics by taking aspects of services that the acquirer does today and therefore provide that service themselves. So their natural step is then to become PF. In Europe, they need to be regulated. Once I've got a PI license, where can I go next? I can become an acquirer. So I start to do services that acquirers are doing, and it's seen as a learning stage for starting life as ISOs as they move into acquirers. So Peter touched on this a little earlier in terms of where the market is going, and certainly we see some major opportunities starting to arise as a result of more organisations wanting to offer and get closer to the customer. So there are available and can access who these PFs are across Europe. And there are probably about 200 that are thinking about becoming PFs and looking at the best way of being able to achieve that. So certainly we is within the various markets, and as acquirers, you've got to have the capability of being able to support this. So anyone who's seen the new visa regulations that were released, I think it's this sort of October last year, that have started to put down the new requirements that are there for acquirers. Things like additional information that goes with transactions, etc., is becoming, the need to be able to support those. And many acquirers are starting to develop that functionality in order to support these merchants. And that is being driven by the demand that is likely to see in this space. So what are the services that can be provided? And I'm not going to go through all of these, but the majority of these services today can be provided and ultimately by a PF. But there are some requirements of the acquirer, typically the interface to the schemes, which still needs to be managed by them. But there's a whole series of things that the PF can do. They can sell, contract, do credit assessment, and to some extent they can do chargeback management as well. there's a whole series of things that taking this away from the acquirer, which happens today. As I said, it's a positive to the acquirer because it reduces some of the services that they have to do. So what about the relationships and how does the relationships work? And I think, one of the typical beauty, the positive side from the acquirer is that invariably you'll have an acquirer who will have an interchange plus arrangement with the PF, and the PF will have then typically a blended rate with the end merchant, so the sub-merchant. So they're certainly, from an acquiring perspective, it's a good distribution channel to be able to get to merchants that they can't reach today. What you then have between the acquirer and the PF is this different contractual challenge around some of the clauses that the schemes have. So I'm sure there are acquirers in here who know about the €1 million or the $1 million challenge, as we like to call it, which is invariably when the volume of a particular sub-merchant exceeds that threshold, the acquirer needs to be party to that contract. And of course there are different ways of trying to tackle that problem, but I've seen a lot of disputes with a lot of acquirers and a lot of PFs around that subject, particularly as merchants flip over to that level. Who owns the customer? Who's the contract with? And so it is an area which does get a lot of attention, but if managed well, it can naturally be able to flow into these things. And the benefit from the acquirer is I haven't got to go around and sign thousands of merchants. That's what the PF's doing. I've got one contract with the PF, ultimately what they're trying to get to. In Europe, the PF has to be licensed, as we said earlier, and certainly the acquirer has to manage the interface there with the card schemes. So what are the advantages of becoming a PF? Certainly the commercial driver, one of the key drivers is that increase in revenue and profits. You see a number of direct merchant contracts. There are, quite often when we talk to some of the merchants, they believe they're managed by the gateway. They don't know who the acquirer is in terms of that strength of that relationship. And yes, we've seen disputes around contracts, who owns customers, etc. But it is a good way of working with merchants and getting that additional services along with acquiring out to the marketplace. It can help with some of the cost management side of it, but it also builds that risk management expertise. So the journey I was talking about, moving from an ISO to a PF to ultimately becoming a licensed member of the schemes, you start to build this expertise and in terms of trying to offer that to your customers. You also are starting to support the models from an operational perspective. Once again, building up those skills and capability. And then finally, the last two, so a competitive offer, so you're starting to be able to compete by offering a full range of services to customers. And I think Peter touched on this earlier. It avoids some of the challenges that the compliance regulations from the schemes have in place, some of the costs associated with that. So there are lots of advantages about becoming PFs. But what about the positive side from acquirers? So from the acquiring perspective, it does create new distribution channels. It's a way of reaching other merchants. Not every acquirer can deploy hundreds and thousands of people across the marketplace. It does generate some new volume. It does open new opportunities. If you've got an ISO or an ISV who starts to become a PF, there can be often sort of vertical solutions that they can offer to their merchants. Something that the acquirer may not be able to invest in, but also have the capability of being able to widen their product proposition. And also, and finally, what it also gives them is a balance of a portfolio. And that I think, is becoming increasingly important in this risk area that we have heard so much about today. Clearly, there is inherent risk within acquiring and being able to balance your portfolio through different recruitments of merchant size, merchant type, merchant opportunity. It's certainly a way of being able to manage it. So what are some of the things that acquirers suffer and some of the challenges around managing PFs from an operational perspective? And what we see, some of the key ones around the governance structure and how that works, some of the risks that are there that are associated with this. So The challenge that an acquirer has is that they're often distant from what the PF is recruiting, so they may be moving into segments which is against what the acquirer wants to do. There's often an issue over product ownership, who owns the customer, how are we communicating to the customer, what are the enhancements that we want to make. Clearly where the PF will operate, whether it operates within a domestic market or cross-border, and just some of the other things that we sort of see around risk, fraud. And I think one of the key things to this, particularly from a PF, is the ability to manage the automation, manage the onboarding process, which is key to being able to support this. So it's not to go into lightly. There are some opportunities that do exist today, and they are continuing to grow. But there are this to be wary about some of the things that need to happen from an operational perspective. Okay, finally then, just some things to sum up in terms of PF, and certainly looking at how to ensure that they are successful. There is this need to be committed to some of these. So there is the need from both sides, both the acquirer and the PF provider, to be able to put the efforts behind making this work for the various parties. Looking at the sectors and geographies that you're operating in, and having clear lines of who's competing with who in terms of looking at your sales distribution channels. If you've got PFs working, you may have your own sales team that are working, and no doubt there'll be a clash at some stage through that process. So it's about being able to manage that process. Look at working with a good sponsored acquirer and partner, and someone who's got an acceptable contract. So if you're an acquirer, clearly you want to own that customer, but there needs to be some flexibility on how that commercial and contractual model works. Ensure that the implementation is relatively risk-free, and look at some of the propositions that exist today. Certainly, I would say that some of these aspects of these success factors are quite important to make sure that PFs are successful. Finally, then, what are some of the risks and some of the things that we'd say in terms of the challenges that PF has, and also from an acquiring perspective? Choosing from a PF perspective, choosing the wrong acquirer, who they work with. As I said, I've seen many of the acquirers which are in the room here who do offer and work with PFs, and not all smoothly. I'm sure there are some challenges that they face today, but certainly some of the PFs are you need to be able to choose the right acquiring partner who are able to deliver the aspects that you're expecting to happen. Understand the risk of this type of business. Peter gave some scare stories earlier. If the PF fails, the acquirer still has to pay. The acquirer, as I like to say, is always the lender of last resort in this scenario. If the acquirer then fails, then we've got even bigger problems in terms of money. They can take a long time to implement some of these things, and certainly there are some major competitors that have operated in this space, and they're pretty nimble in what they're trying to do and have targeted many of these segments before. So just to end, in terms of PFs, is like the PSE health warning. I think there is this pot of gold. There is this gold of opportunity, let's say, from a PF perspective. But there is also the black hole, and the black hole of losses that will just spiral down and down and down until, if you don't get it right in terms of managing some of these aspects of PFs. It's not for the faint-hearted, but it does give you some good opportunities to try and build some new volume, some new sectors, and some new distribution channels.